to our stock of the day. I picked Microsoft because revenue growth just squeaked past expectations. Capital expenditure rose 66% over the past quarter. It delivered a marginal beat on quarterly revenue expectations for that crucial cloud computing business. It highlights growing competition in the industry, according to Reuters, which also says Google's Gemini and other AI offerings are perhaps threatening Microsoft's market share. Chief Financial Officer Amy Hood said that capital expenditures will be slightly lower than in the just completed quarter going forward, but she noted that over time, the rising cost of memory chips will start to weigh on Microsoft's cloud computing margins. In the reported quarter, Microsoft's capital spending totaled $37.5 billion, a jump of nearly 66% from last year. So that's what you see on your screen was intraday trading, so mildly positive, but in extended trade, the share price plunged more than 6%. So let's get a view on our stock of the day, being Microsoft, from my guests here in studio. We've got Mark Moreland from Value 3 to start things off. Mark?
I think the report was absolutely fine. I don't buy this whole thesis of not getting earnings for their capital expenditure. If you listen to the CEOs like Satcher and all of the FANG stocks who are spending the big bucks, all of them are saying they are seeing absolute monetization of their investments, and they're all saying they are short capacity. And if you look at, I think with Microsoft, they said they had, where's the number here? Commercial backlog of 625 billion in sales that have yet to be fulfilled or are on the wait. Now, a big part of that's 110% lift because of OpenAI, so that's 250 billion. So you could argue there's some risk around that because obviously OpenAI is I think Microsoft got a 49% option now, haven't they? Is that what it is? I think it's something like that. It's a very large, effective percentage when OpenAI lists eventually. So they're backing them. But I'm very positive on Microsoft, and if you look at the rest of their numbers, they're going very well. Look at Copilot, they've got 15 million paid seats now, but they've got 450 million Microsoft 365 licenses. So they've got very little penetration yet, but there's 15 million paying for Copilot, which is their AI, and the opportunity there with their existing clients is massive. So when commentators say, oh, a competitor is going to take their business away, it just doesn't work like that. You know, this is like Microsoft's got 450 million seats. Those companies are all, they don't just change. You know, you don't shift from the Office 365
there'd be a revolt if you did in your office.
It just doesn't happen. Yeah. So it's a very, very stable business. I think they're going to do extremely well over the next 5 years. I don't buy the memory argument either, because the price of memory going up affects new compute they buy, and all of them have got the same problem. Memory costs are industry-wide, which means they will add it on and the cost of compute will go up by that amount. It doesn't mean their margins are going to get squeezed. It only gets squeezed if they choose not to pass on the cost. It's not Microsoft style.
Even though the CFO did say that it will eat into margins. So
I know. The other thing too, they've got to be conservative. The last thing they want to do is overpromise and underdeliver.
So buy, hold, sell today, knowing that shares are off.
I actually think Microsoft's probably a buy. I think it'll probably do 20% return per year over the next 5 years. I think I'm quite bullish on Microsoft. I don't own it. It's not a super compounder. It's not going to 10x your money, but it could. I would think Microsoft's got a very good chance of getting to 10 trillion by the end of the decade.
Mark Gardner, MPC Markets, Microsoft.
I'm a little bit more negative on it, but I mean, I sort of see the 15 million take up from 465 as a massive failing from the company, and they have got a pretty solid track record of having that penetration and then no one using their new product. So I'm more disappointed in the disappointed camp about that fact. I think Copilot should have had much more take up, if not 8 to 10 times more, in my opinion. It'd been and I'm saying it's a hold. I don't think you're going to get into too much trouble with Microsoft. I think it's definitely a buy on dip if there's a broader market panic sort of stock. But I just think at the moment we're at the pointy end of the of AI rally and a potential. There's all this capex happening, and investors can get nervous. We've had a great 2 and 3 year run on it. We're really down to our super high conviction picks at the moment. And a year or two ago, we'd be happy to throw money at Microsoft, but I think we're being a little bit more picky just in case there is some sort of, well, I mean, the amount of things that have happened in just the first 3 weeks of this year alone, even a slight breeze or a change in a souring tone in sentiment could sort of push it down, and in which case I'd be very happy to buy it because man, it's one of the great survivors of the tech industry, and it will continue to be so. But OpenAI the market's turned very sour on OpenAI, and everyone's doubting whether they're going to be able to even deliver half the things they've said, etc. And the world's turned on Sam Altman, so it'll be interesting to see how that plays out and how much truth's in it or not. But it's not the same. He's not the poster boy anymore. And Microsoft, I think, is distancing themselves a little bit in a way.
All right, so there's always a bit of drama, it seems, in this AI space. That is our stock of the day, Microsoft. We've got a hold recommendation and a buy as well.